I needed to be able to grow and scale. The sales team was there. We were turning down deals. That's the worst feeling in the world, is when you get a really, really good deal and you have to turn it down. So I needed to figure out who had built the systems and the processes and who was doing it at a bigger scale than me, and what are they doing that I'm not doing.
Are you about to start a podcast or producing a podcast and tired of doing the editing yourself? We have produced over 1,000 daily shows, and the production team that I've created, they're now available to produce shows for you as well. We can do as little or as much as you need, from finding and communicating with guests, preparing introductions, to editing the audio and video. You will sound better, have a more professional presence, and be able to spend your time doing other valuable tasks on your business. Let me know you're interested by emailing me directly at Whitney@lifebridgecapital.com. If you're enjoying this show, I hope that you have liked and subscribed. We would be grateful for a 5-star and written review on Google as well, and iTunes. Please do that for us. We're grateful that you are here and listening to this show. I personally hope that you are learning a lot and your business is growing, or you're learning to be a better passive investor. We would love to hear from you. You can always email us at info@lifebridgecapital.com. If you have suggestions or people you would like for us to interview, please let us know. We'd love to hear from you. Well, today we are coming back with our guest, Brandon Cobb. You heard yesterday how he was fired from that dream position, and you heard how he found a mentor and how he took action to make that happen. Then today we are going to go into their business strategy of raising money. We're going to talk about their specific strategy of how they're insulated against many things. So they're expecting a 2008 to happen, and they have a strategy around protecting their business and their investors against something like that happening. You're going to learn a lot today. Have a blessed day. Brandon, welcome back to the show. Honored to have you back and us to be able to continue the conversation, because you laid out so many great points the first interview that I didn't want to cut them off too short, right? I mean, you were just on a roll with many topics that I knew the listeners are going to learn a lot from, but there was a couple key things I wanted to be able to get into. So appreciate your time.
I appreciate you having me back on. It's an honor.
So, Brandon, we talked about many things. In case the listener didn't listen to the first show with Brandon, I hope you will go back. I hope it was yesterday, depending on when the team got these things produced. But, Brandon went through talking about how he was fired from a job and how, that pushed him in many ways to think differently about his financial future. But, man, he went through some key questions about finding a mentor and how to approach that potential mentor, things you can do to build that relationship, and then how he moved into ultimately building a long-term relationship with that mentor to growing an amazing business to get to where they're at now. But they created a blue ocean strategy, and I just, so many great things, even going through his hiring process. They spend a ton of time on hiring, as we do. And so I understand the importance of that. And he laid out some key things that if you just did what he said, you're going to have more success at hiring. Yeah, it's so crucially important. So Brandon, also, I wanted to go back and discuss about getting into the syndication business, right? Like you all were successfully flipping homes. You were successfully wholesaling. You had that business model down. You could find deals, but you ran out of money. You knew, okay, we got to do something to find more money. What was that process of learning the syndication business? Because that can seem so daunting to some, right? It's like, well, do I really want to take investors' money? Some people are really scared of doing that. Right. And growing a syndication business where we're working with investors instead of just using my own capital. Right. What was that process like for you? And let's talk about, growing that side of the business.
Yeah. So you've got to reach a certain level of confidence. If you don't feel confident in yourself, your abilities in the deal, it is not time to use other people's money. We had done so many deals with our own capital or, using like hard money, professional lenders that we were like, all right, it's time, right? We need to be able to bring other people on board. So it was a position where we had about $6 million of construction out. And what we had normally done was we had done these like normal promissory notes where if we needed $300,000 to build the home and buy the land, we went and, we were going out there and we would raise that money. So it wasn't a syndication style. We were still doing debt positions. We weren't inviting investors on as equity positions. And we realized that in order to grow to the volume that we needed to grow, about $20 million a year new construction, oh my God, it was going to take a long time to raise an additional $14 million. And I was kind of the single dude one-man band raising the money for my team. I had an assistant that helped out with a lot of things, but that's a pretty big task. And I was like, God, I'm never going to be able to do this. And so again, I went back to who, not how. And I said, well, who's doing this at a bigger scale and how are they doing it? What am I doing wrong? I joined a mastermind. It was strictly focused on raising capital. Most of the people in there were doing multifamily deals. They were not doing, single family new construction. So it was kind of an odd bird out. But I noticed that they were raising money and they were able to leverage that money to get, construction loans from the bank to do these deals. And I go, wait a minute, you can raise $2 million for a deal and buy $6 million worth of real estate and get a $4 million loan. I was like, that's possible, which is kind of funny because you think with, 6-7 years in the business, I would have figured that out, but I hadn't. And I was like, oh my gosh. So I sat down with an SEC attorney and they explained everything. And the guys in the group were able to connect me with a great attorney who was able to deliver. And he explained the rules around raising money. Luckily, most of the people I was doing business with, I already had a pre-existing relationship with. I had a mild form of success, raising some money over 4 years. I probably raised $6 million. And then once we had the system built and we had the paperwork done, all I had to do was go to my investors and say, hey, good news. I can give you guys higher returns than what I've been giving you. And here's how we're going to do it. So I explained the difference. Hey, it's going to be an equity position. It's not going to be a debt position. Here's how we can pay you more money. Your money's going to go into this entity. And this entity is going to be used to get more money. More money means more profit, which means more returns for you. So I explained what the risks were too, because there's more risks associated with it. And at the end of the day, they're like, man, you've been performing and we've been really happy with you. We trust you. And so I was able to take that, I'd say 4 or 5 million of the 6 I'd raised, put it into, a syndication form into these different deals. And man, things became a whole lot easier. When we did that. It opened up a lot of new doors and really allowed us to scale because, we could do things like charge a small fee to help out with operational expenses. That helped out with cash flow. It allowed us to make the hires sooner that we needed. It allowed us to not have any pressure on the business. That's when things really took off, was when we learned how to syndicate these deals and add value to investors.
Awesome. Wow. Okay. So you joined a mastermind. I wanted to go back to that. You joined a mastermind, and I've been in numerous masterminds, and some have been better than others. However, I would say almost all of them, I've met people who I've stayed friends with, right? Or we've learned from even longer down the road, whether I'm still in that mastermind or not. I built friendships where we still connect, or we've done deals together, or we help one another, right? In some way. Speak to why, or I assume it was around raising money, but was there a specific reason about this mastermind versus, or outside of just raising money?
The subject that I was focused on at the time, I needed to figure out how to do that because I had all my own money, locked up in the deals. I had $6 million out with investors. I needed to be able to grow and scale. The sales team was there. We were turning down deals. That's the worst feeling in the world, is when you get a really, really good deal and you have to turn it down. So I needed to figure out who had built the systems and the processes and who was doing it at a bigger scale than me, and what are they doing that I'm not doing. And I found the mastermind through a book, Raising Capital for Real Estate, by Hunter Thompson. The mastermind's headed up by Hunter Thompson. Great mastermind. Hunter Thompson's a great dude. Highly recommend it. But that's how I was introduced to the mastermind, through the books that I was reading.
Yeah, that's awesome. And it seems like you were seeking information though, right? You read the books. He does have a great book on raising money. I've spoken at that mastermind. And so I would encourage anybody to look him up in that book, as far as if you're focused on raising money. Definitely lays out some practical steps in there, right? To help you to brand yourself and raise more money. So I love how you took action, though. You're helping educate yourself. You find this mastermind. You start meeting more people. You found a great attorney. You're asking questions, right? I mean, you are trying to ensure you're doing this the best you can. What were some of the next steps to really, say, grow in raising money? To whether it was through marketing, whether it was just through networking. What did you do next?
Yeah. So that mastermind gave us all the back-end systems and processes that we needed. I'd done a really good job of cultivating the relationships and delivering to the investors. But in order to bring on, new capital, you've got to have certain systems and processes in place. So one of the first things that we did was we looked at all the investors that we had. And we said, who accounts for most of the capital that we've raised? Is there a similarity in them? And we did notice it. because the biggest piece of advice they gave us is you need a target avatar, right? Who is it that you serve best at the highest level? And for us, it was busy business owners or high paid professionals that have discretionary income that want to reduce their taxable liability and create passive income with a focus on capital preservation. And so that animal has very specific needs. And so what we did was we started creating content that was curated around solving the specific needs of that target demographic. So what does that look like? If you're a busy high earning professional or a busy entrepreneur and you've got discretionary income, well, you've got a tax problem, right? That's where like the Class B and Class C value add multifamily depreciation benefits. So we do videos centered around depreciation. We'd send those out. Hiring systems and processes, right? We're all entrepreneurs. We all have issues with hiring. So we create videos around that. How to hire for culture, anything that we knew would provide value to that target demographic. And we would put it out on our email list because we had a nice email list that we'd created over the years back in our wholesaling days, right? A lot of single family house flippers and people searching for rentals, just educating them on the value of passive investment and how to do it. We raised a couple $1 million from that list. We were sending it out every single day on social media, hitting all the organic channels, YouTube, LinkedIn, Facebook, and then our own network, asking our current investors, hey, do you know anybody who might be a really, really good fit? And funneling people to our website. And so the website that we have is centered around value add, right? That's, you go to the website, there's a book, Recession-Resistant Passive Income. You can hop on there and free. It's at hbgcapital.net. It is designed to explain exactly how you can insulate yourself against another crazy 2008, 2009, what product types are going to do well, and most importantly, why those product types are going to do well. So they explained what we did. We had another free ebook, 100 questions passive investors should be asking before investing. That's the best thing you can do when you're jumping into a new niche, no matter what it is, whether it's investing or you're trying to get into building cars. You want to make sure you're asking the right questions to the people that you're vetting. And so that book can add a ton of value and help prevent making a really, really bad investment. Gosh, what else? There's so many things centered around raising capital. The biggest thing you need to do is add value.
Yeah. What about any tech that you've used that have helped you? You all use like an investor portal, CRM, those things, or anything that has helped you to streamline this process or be more efficient?
Active Campaign. So we used a contractor. His name's Jason Wright. He is an Active Campaign specialist. He did a really good job of building out all of our backend systems and processes. So when you go to the website and you sign up for the ebook, you're going to get 6 more emails over the next 6 days that are the highest viewed YouTube videos that we had, videos and content that we got the most feedback from and said, wow, thank you. This really helped. So again, all designed to deliver value. If you decide to set up a call with us, there's another email that's automatically sent that says, hey, make sure you absorb this information before the call. It's just really important. And a lot of people were like, wow, that was really good. This helped. And it helped us have a very efficient first time call that was centered around just basically getting to know them and their goals and what they're trying to achieve. And then afterwards, when we put them in the next stage, they get another thank you email. Usually there's a handwritten note that's sent out if they put their address in it. So the whole thing is completely automated from start to finish, from emails to text message follow-up, so that you're not having to do a lot of this stuff. Active Campaign has helped a lot with all of the backend systems and automations.
No doubt about it. That's incredible too. That's some type of CRM, right? You got to document these things, especially if you're doing a 506B deal. So, Brandon, appreciate the content around that. And I wanted to ask you too, and even the transparency around the type of content you're creating is great. Is there a platform that you focus on the most as far as, YouTube or Facebook or LinkedIn or something like that?
They all seem to work really well. Most of our new capital that we raise, honestly, it comes from referrals, right? Just making sure you're taking care of your existing investor base. I've had investors start out with $230,000 and they're up to like $2.5 million with us now, right? You never know how much money somebody has or when they're going to come into money. I've got old buddies from, oh my gosh, grade school who, inherited, money and they want to invest. People who have reached out to some of the people who've been investing with us for a while and asked, hey, do you know somebody? So a lot of it is referral based. That's the strongest platform I think you can take advantage of. So building campaigns around asking for referrals, having relationships with your investors, make sure you're following up with them at least, once a quarter or every 6 months and asking how things are going. Make sure that you have an investor experience roadmap. That's what we have, because we figured out that looking at the numbers, wow, most of the new capital we raise comes from our existing investor base, probably 30 to 40% of it. And why is that? It's because we give them a great experience. So how do we optimize that experience? How do we make them feel like they're a part of the deal, right? We do video walkthroughs of like all of our homes. The PMs are like walking them through the stages. We show the permits, we show the passing of the framing, everything, the next steps involved. We put the Gantt chart on all of our updates so they can actually see where we are in the process and make sure we're online. We put the budgets, how much have we spent versus how much was on the budget. We want them to feel like they're part of that investment. And we try to make it fun too, right? Because at the very end of the day, people want to spend money on things that are fun. So we try to make it fun too along the entire way. So I'd say that that's where we focus on most, but all of the platforms together, they all add a little bit of leads, and that adds up to a pretty good amount of incoming leads.
Awesome. Yeah, I love that. It's just, you laid out many great things there as well, as far as even the video walkthroughs. Investors love knowing that, seeing those things, right? Oftentimes your investors are in another state or, really far away. They can't be there. But I just think it says a lot when you take the time, especially to take pictures at least. But man, a video is nice as well, right? They can see what's happening, that there's progress, that, hey, I did invest in an actual deal here. Things are happening. I feel like I know Brandon better because I heard him talking as he's walking through this project or whatever it is, or maybe I met a team member on the video as well. So incredible. I want to jump into, we mentioned it on the last show and you did before we started recording about everything you are doing right now is with the expectation of another 2008. Maybe you can highlight just your business model a little bit more. And I want to jump into what that means and what does that mean? And how does that affect your business strategy?
Yeah. So at the end of the day, you want to put as many layers of insulation between you and the market as possible. So how do you invest in recession-resistant real estate? Well, it's a subjective term and it's going to change depending on what the market is, right? So we look for unique opportunities. Right now, we think the unique opportunity is affordable new construction products because there's such a drastic low supply of this product and there's huge demand for it. Now, not to be confused with like Section 8 or government housing. We're not doing that. We're talking about like, how can a blue collar working class family get into a new construction home, right? So the first thing that you got to look at when you have this contraction in the economy is, where are the people going to go? The need to live doesn't go away. They still have to have somewhere to live. But what are they doing? They're losing jobs, or their income's getting cut. Spouse might have a temp job or have to downgrade to something with not as much money coming in. They cut costs, and your biggest cost for most consumers is your living arrangements. So we're really gung ho on product types $385,000 and less. We think there's going to be a pivot towards that. Again, it's got to be in a good area, right? That's important. And it's one of the areas that we focus on in Nashville, is because in the suburban markets in Nashville, you can still get these, $385,000 new construction homes in great areas with land and yard and everything that they don't have in these higher tax states like New York and California. So that's one reason we really like Nashville. Another layer of insulation you can add is, what has the growth of the city been like? Nashville has been one of the fastest growing cities in the United States the past, 6-7 years. That's another layer of insulation that you get. Cities with fast growth typically don't get affected as much as cities that don't have all those jobs moving there. Another reason we really like, Tennessee and, Florida is the no state income taxes. So any state that puts more money in the business's pocket is going to move their businesses there. That's why you see so many businesses moving from California and New York and these high tax states to Tennessee. They like that. And they're all coming to Nashville because it's better than the other cities. The local politicians are also incentivizing businesses to move here. So they're giving cities further tax cuts and making it more attractive for them to move here. So you've got all this perfect formula for attracting businesses to the city. That is going to be your affordability and growth are the two biggest layers of insulation you can add to whatever recession you're going to have, whether it's real estate or the economy or whatever. So from a macro perspective, that's what you're working with. Now let's talk about some of the smaller layers of insulation. What can you further do to add insulation to your investments? Well, you want to buy deep equity deals. So we're not in our homes focused on, 7,000 homes a year with 10% profit margin. We want nice 20, 25% profit margins after it's all said and done. Most of our loans are underwritten like 67% LTV or less. That gives us a nice runway. And then you've got to think of the next risk is the market risk. So how long are you in and out of these deals? So we do two different deal types. We do, land development where we can build multiple homes all at once, track infill projects. And then we've got your just straightforward infill projects that are like you're buying onesie, twosie. We typically won't look at it unless we can build at least 8 homes there. But what that does for the infill, we're in and out in 10 months, usually. We tell people 12, but that allows us to at least limit our market exposure. And we're not buying the land until we've either got a permit in place or there's entitlement done. I've heard some crazy stories out in California where they buy stuff and gamble on the entitlement. Like it's just insane. So we want to make sure that we limit the risk of buying a bad investment by making sure that it's good to go before we buy it. And then self-managing everything. Vertical integration in today's market couldn't come at a better time when things are competitive with cost and builders being super busy. That's why we self-manage everything. We don't want to rely on another builder who could go belly up or bite off more business than he can chew or become disabled. And all of a sudden your whole portfolio is at risk. We don't want that risk. So we're typically in and out 10 months on the infill stuff. For the land development, what I like about it is you have multiple exit strategies. And you've got a hot topic right now called build to rent. And I call it stupid money. I think there's a lot of stupid money chasing the build to rent space. So we're developing these lots and we've got different exit strategies depending on where we're at. We can either do the development, which might take 4 to 8 months tops, and we could sell it off to a bigger builder, get in and out of the deal. Or if that goes well, and at the point where we're done with all the roads and infrastructure, we could say, okay, what's the market look like? Do we want to build ourselves? Okay, market looks good. Let's do it. So you've got multiple exit strategies. So having that new asset class where, we're focused on selling some stuff to some build to rent guys, that's great. But what's the worst case scenario? The consumer, right? So as long as we build that in and have multiple exit strategies, all right, selling off the build to rent, selling off the consumers, refinancing ourselves and keeping it as a build to rent community and stabilizing it, that's another option. We want as many exit strategies as humanly possible that have all those layers of insulation stacked on top of it.
Incredible. Again, I appreciate you listing all of that out. I think you mentioned in the last interview also around building smaller homes. And I was thinking about that, as you were talking too, and how that's almost another piece of insulation there. I feel like so many, the prices of homes have gone up so much. So many people can't even afford a home. Maybe that would have before. I know that happened in Boise. There was like the average home price went up so much. There were so many people who thought, we're going to buy a home over the next 6 months. And all of a sudden prices went up just so much. They were like, okay, now we have to rent for at least the foreseeable future, because we just can't afford that same home that we could have a few months ago. Right. And so even building a smaller home, I can see you, attracting great people that, they see a great home. Maybe it's a little less square feet than they had hoped or thought of. But I think that people are coming back around to that way of thinking, right? It's like the big home is not as attractive as maybe it was at one time. And they can get an amazing home for maybe in their price range as well. So just more exit strategies, it sounds like. Well, Brandon, incredible. So a few final questions again. What's your best source right now, other than referrals? What's your best source for meeting new investors right now?
Best source for meeting new investors. We're getting a lot of traction on the list that we created years ago. So back when we were doing a lot of wholesaling, a lot of flipping, the game when you're wholesaling is your cash buyers list. You want other investors who are buying homes to flip or homes for rentals. And if you get something, you want to blast it out to them. We started creating curated content that was designed to deliver value to these people and educate them on passive investing. We raise a lot of money from that list because a lot of people just don't know that this whole passive investing thing is out there. And when you look at the returns or the cash flow compared to like your typical single family rentals that you get, oh my God, the cash flow from doing these passive investments is like 6, 7, sometimes 8 times what it is in a rental market. And you don't have the headache and everything. So it's all about educating people on what the benefits are and inviting them into this world to learn more. That list has by far been the best. If you don't have a list, go try to network with some of your wholesalers in your market. They've got those cash buyers lists. That's a great place to start because the people on that list, they already understand real estate. They're already probably in the game or they're trying to get into the game. And they've probably got a little bit of money that they've saved up and they want to invest. So that's, and again, go figure out ways to add value to the wholesalers, to get these lists. But that would be a great place to start.
That is a great place to start. And I would say most of those guys too, if they've been in the business a long time, if you can build the relationship so they trust you, right? They don't feel like it's a gimmick, man, they're going to want to be passive once they learn about the syndication business, right? Mm-hmm. They're going to be tired of those tenants and toilets in a big way once you can build the trust. I think it's a great idea. Brandon, what are some of the most important metrics that you track? It could be personal or professionally.
Yeah. So right now it is budget, because of the volatility with construction costs. We have everything line itemized out and we go over budget on one particular line item. Like we look at it and we're looking, all right, how do we cut costs? And one of the things that we implemented that really has helped this is, getting 2 warehouses up and running where we can store materials. And, we're raising additional money on the front end in order to just bulk buy as much materials as possible so we don't run into some crazy cost increase, 4, 5, 6 months into the project. But we're focused on measuring our costs. We're focused on measuring the acquisition side. So how many people do we talk to and how many deals does that translate into? In the past, it was like 30 phone calls produce 10 appointments and 10 appointments produce 1 deal. We've gotten a lot smarter by pivoting our approach, reverse engineering our efforts, and really drilling down to the areas that are working really well for us. So when we measure these conversations, when you do something new, you can see how much of a difference that's making. I'll kind of tell you a story. So what we did was we went to all of the local municipalities around Nashville. Davidson County was just too big. You couldn't get in to meet with planning or the mayor or whatever. It's just too hard. We met with like the mayors, all these suburban markets. And we said, hey, where do you want density? And we got a map and they literally looked at us kind of funny, like, no one's ever done this before. But yeah, here's our vision. Here's what we're trying to do. And they actually circled the areas like, we want density here around this corridor. We're looking for this. So we had like the Krabby Patty formula. So all we did was we just went to those areas and told the sales reps, we're just going to focus on these areas. We door knock, we do some cold calling. We build relationships with people in the area that we've identified that own hundreds, if not thousands of acres of land. And we just focus on those areas. So when we did that, we noticed that our numbers that we were measuring, oh my God, the numbers looked a whole lot better. So we're talking to 5 people and getting 1 deal now. So make sure you're measuring your whole acquisition funnel so that when you do something new, you know if it's working. And just like Michael Cowlett says in the pumpkin plan, if you want to grow a giant pumpkin, identify the strongest pumpkin on that vine and then sever all those other pumpkins off so all the nutrients flow to that one pumpkin. That's what we did. That's really worked. So measure your numbers and measuring construction are probably the 2 biggest things we measure among a ton of other smaller stuff.
I appreciate that recommendation around the pumpkin plan too. I've heard many great things about that book, but I've not actually read that book. So Brandon, another great interview. I'm grateful for your time again. And I would encourage the listeners to listen to the first show with Brandon. He goes into many different great things, which you've heard me talk about, but also how they give back. And they're giving away a home to a homeless veteran. I love that. And just your all's desire to help in that way. Brandon, how can the listeners get in touch with you and learn more about you?
Yeah. So if you're someone who's interested in building legacy for your family around real estate and you're not sure where to start or getting started, or maybe you're worried about the next recession, what we do is we invest investors' capital into recession-resistant real estate that's designed to be insulated against market volatility. And how we do that's unique. You can go to HBGcapital.net. Download our free ebook, Recession-Resistant Passive Income. There's another ebook on there that's free, that's phenomenal if you're just getting started and you're not sure what questions to ask. It's 100 questions passive investors should be asking before investing. Again, you can go click on the educational resources tab at hbgcapital.net. It's HarryBobGaryCapital.net. Or if you want to talk recession-resistant real estate with me, I've got my calendar on there. Feel free to schedule a call. We'd love to learn more about you and your goals and how we might be able to help.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.